Okay, everybody, welcome to the VWAP Wave System course, updated for 2025. My name is Chris Drysdale, and I'm the founder of the Drysdale Trading Group. Really excited to have you guys here with me today. I've been a day trader since 2010. I've actually been an audited profitable trader when I was with the Warrior Trading Group. They actually verified me for well over $200,000 worth of trading profits in a rather short time period. I did that within about 4 or 5 months. Because of that success, I was brought up in that ecosphere with Ross Cameron and raised me to be an educator with him, put together an entire course on scalping hard to borrow small caps, and led many group sessions and teaching sessions. And I pretty much learned from one of the best trading educators out there. I've spent many years as a full-time trader. This is my primary job. My primary income is from trading, and this is what I spend most of my time doing, and I love it. And this course is an aggregate of all of my experience and the exact strategies I use to profit consistently in the markets. So let's get to work, guys. We're going to start with Module 1, the basics, an introduction to futures and market selection. All right, so welcome to the Vwap Wave System, everybody. Welcome to the full video course of the Vwap Wave System, a professional grade trading strategy for navigating the futures markets with clarity, confidence, and consistency. Okay, this exact strategy can be applied to markets outside of futures, US equities, Forex, crypto, but I am a futures and stock trader, and I mostly day trade futures, so this is where I spend most of my time. But if you do trade other asset classes, you're more than welcome here, and this strategy does apply. In this course, we're going to walk through not just how the strategy works, but how to think like a trader who uses it to manage risk and build a sustainable income through trading. So whether you're brand new to futures or you're here just looking to refine your edge, you're in the right place. So why trade futures? And I get a lot of people in the Discord who trade Forex and crypto, and I think you're missing a lot by not trading futures. All right, futures offers unparalleled access to global markets with powerful advantages that are not offered in things like Forex. First of all, we have 23-hour trading sessions. Right? We trade 5 days a week. No more waiting for a bell to take our trades. So if you're overseas or in Europe or Asia, these markets are good for you as well. There's no pattern day trading rule for us here in the United States. To day trade in the United States stocks, you need over $25,000 in a margin account to take multiple day trades and use margin. So futures is a great spot for people looking to start trading with a small account, or we also have prop funding options where you can trade futures with a prop firm and get started for as little as $49. You can leverage your money with defined risk. All right, so you don't need as much money to make really good money. Your margin goes much further with futures as opposed to stocks. In the United States, we have significant tax advantages. All right, as opposed to day trading stocks, for example, which is all taxed as short-term capital gains, which is your ordinary income bracket. Futures is traded at 60% of it will be treated as long-term capital gains. That's much closer to 15 to 20%, with the remaining 40% being taxed as ordinary income. And this is a big one here, clean order flow and tighter spreads as compared to equities and options. But the order flow and volume data that we get from futures is significantly better than Forex. Most Forex brokers do not have centralized exchanges, so there's no reliable volume data, and there's incredible amounts of manipulation with the orders. So the edge is not in your favor just by trading Forex. So you can trade currencies and gold in futures. You don't need to trade with a Forex broker, right? You'll have an edge by switching to futures as opposed to trading Forex. So what is a futures contract? A futures contract is a standardized agreement to buy or sell a financial instrument or commodity at a predetermined price and date. The good news is all contracts we trade are cash settled. All right. So if we're buying a contract on oil or soybeans, you're not going to get a delivery of soybeans or oil. All right. These are all cash settled, and the broker will liquidate you for a profit or loss before you have to worry about any of this type of stuff. Each tick in a futures contract has a fixed dollar value, which varies per instrument. So precision matters, and whether you're trading a stock index or oil or gold or soybeans, they're all different, so they need to be learned. Some of the most popular futures contracts we trade are index futures, and the big ones we trade here are going to be the ES, which is the S&P 500. This is the most liquid futures contract in the world. All right, it's a little slower tempo, and ideal for building consistency. All right. We have the NQ, which is the NASDAQ 100. This is a tech heavy composite of US stocks. This is significantly fast, thinner in terms of liquidity, and volatile. All right. But there's still pretty darn clean price action. All right. A lot of traders love NQ. It's a scalper's paradise. You can make a lot of money really quick if you know what you're doing. So it's very powerful, very popular. These are probably two of the most popular indexes that we trade in the Drysdale Trading Group is going to be ES and NQ. And then there's a micro version of each. We have RTY, which is the Russell 2000. This is the small caps in the United States, much smaller companies. Thinner, punchier, and ideal for short-term setups. Also pretty volatile, similar to NQ. And then we got YM, which is the Dow Jones. These are some of the large industrial companies. More dividend style, less growth, more stable. And this is great for slower markets. Also very clean price action. Each offers different tempo and volatility, so we adapt setup selection and sizing accordingly. You'll often see me on the live stream picking one of these out of the four because I am watching all four. Some days I might head over to ES, other days I might be trading the Russell or the NQ. All right, it depends on the setup quality. It depends on the conditions. Some of the commodity futures we trade are sea oil, which is crude oil. This is very aggressive, highly responsive to news and inventory reports, which come out on Wednesdays generally. Natural gas, which is also extreme volatility. They call it the widowmaker because it is so volatile. Much more advanced and tighter risk is needed. Okay, those are our energies that we trade. We trade precious metals like gold, GC. This reacts very well to structure and clean trend days. We have silver, which is a little more erratic than gold, but offers great rotational fades. And we have HG, which is copper, a trending commodity with economic sensitivity, which has been a fantastic market to trade as of late. These markets behave differently than indices, but VWAP Wave adapts by anchoring to structure, not prediction. Okay, so these are all great markets to be traded with the VWAP Wave system. We also trade some agricultural and currency futures like soybeans and corn. These are much lower volume, session dependent, structure focused instruments and often don't move as much and they're much slower. Great for beginners, but they will trend very cleanly when they do and offer beautiful price discovery setups. We trade Bitcoin in forms of the micro Bitcoin futures, so we can have exposure to Bitcoin without using crypto exchanges, which tend to be very expensive and offer bad fills. Trades like a very volatile equity index with big moves and rotations. So when Bitcoin and crypto is having a big day, we can trade Bitcoin in futures without having to worry about a Bitcoin or crypto exchange with all those expensive fees. And these instruments round out a diverse portfolio of opportunities. You can also trade the British pound, the Australian dollar, the Japanese yen, all of these available, the euro dollar, all of them are available on futures. Okay, if that's what you prefer. I don't tend to trade the currencies, but they are available. So these are all tradable using this very same playbook. All right. And the reason we watch so many different markets because we have, especially for those of us who don't want to trade all day or watch the charts all day, the more markets we expose ourselves to, the more opportunity and setups we have, right? So if the indexes aren't setting up, I can go over to gold or copper or oil, all right, and grab a setup, and I could be done in an hour or two trading because I have access to all of these markets and I know them. All right. If you focus on ES every day and all day or NQ, you might spend much of your morning waiting for a good setup. All right. If you only have an hour or two to trade, you might not get a setup. All right. So for those that have limited time windows to trade, being able to expand to other markets to grab those trades is a good idea. All right. But you want to match the trade to your personality and account size. So ES and GC are more structured and measured, while NQ and CL are aggressive and fast, or soybeans and the Dow are slower paced. Ideal for cleaner setups. So some days certain markets will align perfectly with our setups. Others will be choppy. The Vwap wave gives you a filter so you don't have to force trades on the wrong instrument. So futures has margin and tick sizes, and this is how they work. Each contract has a different tick value and margin requirement. So for example, the ES is $12.50 per tick, and you need $500 in margin to trade one ES contract. All right, that doesn't mean you can have just 500. You need more than that because if you drop below 500, you know in your account you no longer have enough margin for that contract, so you will be liquidated. All right. You need to have enough margin plus room for loss. NQ is $5 per tick. You'll need $1,000 in margin. Oil, $10 per tick, $1,000 in margin. Gold, $10 per tick, also $1,000 in margin. This depends on your broker for the margin, but the tick size remains the same across all brokers. Now, micros is what I trade. All right. We just looked at the minis. Micros offer reduced exposure. So MES, MNQ, MGC, MCL. These are 1/10 the size. So ideal for learning or risk-adjusted scaling, which is what I do, risk-adjusted scaling. All right. So the margin on MES, the micro, right, is only $50. And the tick is 1/10, $1.50. The NQ, the MNQ, is 50 cents per tick and $100 in margin. Okay. So almost everybody should be trading, especially in the newer areas, should be trading the micro version of everything. The only things that don't have micros are soybeans and corn, but they move so slow, it's a lot easier to manage risk. So you're going to use this knowledge to size trades appropriately and to protect your capital and not blow your prop firm evaluation or funded account. Let's talk a little bit about volatility and session behavior. Futures markets behave differently depending on the time of day. So we have US regular trading hours. So Eastern time, 9:30 a.m. to 4 p.m. Eastern Standard Time. Or Globex, which is also considered the overnight session. So that opens at 6 p.m. Eastern Standard Time and runs to the market open the next morning. We have lots of economic calendar events like the CPI inflation report, the Fed meeting minutes, the Fed meeting itself, interest rate announcements, random news coming out about the economy, which can dramatically impact the price of all of these instruments. With some of the commodities, we have seasonality. So with the grains like corn and soybeans or natural gas, they tend to go up and down based on the season. So price going up when it's cold or price going down when it's hot. Our setups account for volatility windows like that 9:30 a.m. until 11:30 a.m. Eastern Standard Time because it's the open and much more volatile. Tends to be calm midday here on the East Coast. And then for the afternoon session, going into what's called power hour, 1:30 to 3:30 p.m. Eastern Standard Time, volatility can also pick up significantly again. All right, we try to avoid the immediate open and any news volatility unless structure is crystal clear. All right, this isn't news trading. If we get a huge spike of volatility because of news coming out, we're usually sitting on our hands watching. All right, it's tough to manage risk. You're chasing price at that point, and it's in a lot of ways more like gambling than it is trading, especially with this system. And most of that trading is being performed by automatic algorithms and computers by the big hedge funds anyway. So what we look for in a futures market, we seek clean rotations between VWAP and its deviation bands. And we're going to talk all about this in the next couple of modules. We're looking for clear balance versus imbalance conditions. So whether there's an agreement on price or whether there's price discovery. Strong order flow reactions at our value area extremes, so the edge of value. And repeatable structural behavior. We're not looking for randomness. We're looking for reactions that repeat over and over again based on auction market theory. If the market isn't giving us the structure we're looking for, we wait. Patience is a huge part of our edge. All right, we have core setups and the system is taking the setups. All right, anything outside of that is not part of the system, therefore not probable and somewhat gambling. The key takeaway here is the market is the same everywhere. They all trade the same. Every chart you'll see in this course is either in balance or in discovery. Once you master reading value, deviation, and structure, the market you're trading or the ticker actually doesn't matter at all. And that's the power of the VWAP wave. One framework, multiple markets. So up next, we're going to dive into auction market theory, the basics of what that means and how it works, and how to use that market context to be able to take trades and high probability setups. So with that, I will see you in Module 2.